I'm Andrew Goddard, and this is the weekly Volatility Roundup from CMC Markets Connect. Tesla was one of the most active single stocks in recent days, with a series of analyst downgrades being sufficient to drive a price reversion rather than a potential test of fresh 9-month highs. Net movement over the shortened trading week was, however, limited, and with growing support being seen across other EV manufacturers to adopt the Tesla charging system as the industry standard, the company will remain one worth watching for some time yet. 1-week vol printed 91.22% against 68.64% for 3 months. Cryptocurrencies bounced back to life last week, with Bitcoin Cash the clear standout. That regulatory filing by Blackrock to launch a spot Bitcoin ETF is seen as driving direction for the underlying market, allowing the legacy BTC/USD contract to retake the $30,000 mark. But more impressively, Bitcoin Cash had added close on 80% by Friday. That was sufficient to push 1-week volatility on BCH/USD to 133.57% against 56.57% for 3 months. The Nikkei proved to be the most active equity index, reversing from a fresh attempt to once again break above those 3-decade highs. The market had already been rattled by the Fed's hawkish statement, and attention is now moving on to month-end profit-taking and portfolio rebalancing, although monthly gains remain impressive. 1-week vol on the Nikkei printed 20.29% against 15.54% for 3 months. In terms of fiat currencies, it was sterling that stood out for price action following the surprise decision by the Bank of England to add 50 basis points to borrowing costs last week. Early gains were, however, reversed as concerns grew over the impact this may have on the UK economic outlook for 2024. On Euro/GBP, 1-week volatility printed 6.5% against 5.22% for 3 months, while sterling Aussie came in at 8.81% on the week and 7.82% for 3 months. And finally, in soft commodities, it was corn prices that topped the board. Underlying concerns over how dry it has been across much of the US Corn Belt had been weighing, but expectations that the weather may now break proved sufficient to see a meaningful reversion in the underlying. As a result, corn prices stopped short of attempting a test of fresh highs for the year, with 1-week vol on corn printing 41.63% against 28.61% for 3 months.